Alright, hey guys, this is the third installment of the video series I'm calling 3 Steps to Heaven. And if you haven't watched the first 2 videos, I recommend you watch those first. This will make more sense if you do that. In this video, we're going to cover trade setups on the 1 hour chart plus technicals. I like using the ATR, average true range, and the EMA's 834. And I also like to have the 200 on there, just so I can see the overall direction of the larger trend, but I'm using the 834 to manage the trade once I'm in it on a lower time frame. But the basic entries are really taken off of the 1 hour. Let's talk about my favorite 1 hour entry, which is a break of a zone and a back test. Now, here, this zone, as a scalper, this zone worked repeatedly because I'm looking for 20 to 80 pips a day. And the way I like to do it is put on multiple positions and take off gains on half once it hits 20 pips. And the wild thing is sometimes you'll hit a zone where you can trade it 4 times, 2 times, 3 times, 4 times, grabbing 20 pips each time. But for the purposes of this video, I'm really going to talk about managing a trade once you're in it, using the 1 hour to get your entry. So one of my favorite ones is when a zone fails, because even after a zone fails, I've often scalped it successfully, so it's already paid me. Like right here, I'm scalping long. As soon as it hits this zone, got 20 pips, 20 pips, 20 pips. Didn't stop me out because I trade small enough that my stop is below the zone. The deeper in the zone it goes, the more positions I put on because the stop is closer. So I'm still risking the same amount, but I just have more positions on. So go long again. Now here, I finally would have gotten stopped. In fact, that's probably what happened because this is so long ago I don't remember it, but I'm sure I was doing that here. So let's say on that last long attempt I got stopped. So I just wait. I get out of the way and I let price tell me what it's going to do. And what it's going to do is, this is the candle that price really gave up on. See how there's no wick on that candle? So I want to see, where does price bounce from? And this is where it bounced from, is that wick right there. So I put on the fib tool and I'm looking for 618886. Now this goes back to the first video. So if you don't know what this is, you got to go back and watch the first videos. So 1 hour close below the zone. That's the first clue. 1 hour candle close below a known zone. Then a back test. Well, this next candle didn't give me much of a back. I mean, you could call this the back test, but let's just say I didn't take that because it didn't come up high enough. And it kept going down. I'm not going to chase it. I'm not going to go long. I'm not going to go short once it's already had a move like this. I want to go short when it's back testing. So when it starts bouncing off of here, I'm putting the tool on it. And I'm measuring from the top of this candle, because there's no wick, and this is the last time that it had any upside traction, was this candle. So this is where it really let go on the 1 hour, and it came down. Now we have a back test, finally. And it came up in between the 618 and the 886. So I go short, multiple contracts. When I get 20, I'm taking them off, half. I'm taking half off. So here's the deal. Now I'm in a trade, and I've got a half position. Now what? Okay, hop down to the 8 minute. Here's the same exact zone on my 8 minute because I've linked these charts together using this link button. So when I draw something on the 1 hour, it shows up on my 8 minute. So here I am being short. And let's say I didn't get short until 71.77. And I took half of it off at 71.57. So I just booked 20 points. But I still have half on. So now I want to know, how am I going to manage this trade? There's 2 ways to do it that I like to. I mean, there's 100 ways to do it, but the 2 ways that I like to do it is using the 834 crossover EMA. So I'm short here at 77. I've already taken gains, and I'm not going to get out of that remaining half until the 8 touches the 34. And I actually would be delighted that I got short up here just off of the zones on the 1 hour without using anything else. Nothing else. Well, except fibs. I'm using a back test of a supply-demand zone on a 1 hour chart using a simple fib measurement to gain entry on a 1 hour. But then once I'm in the trade, I'm hopping down to the 8 minutes. So I want to see the details. So here's the 834, and I would be delighted to have been short and then after the fact find out that this is the posture of these technicals, because this is great. This is a great place to be short. So I'm just going to stay short until this 8 EMA touches the 34. Or you could say crosses, touches, whatever. Some people use a candle body closing above the 34. It doesn't matter. Just pick something and use it as your signal. That's the key. Because otherwise, as it starts going against you, if you don't have a process or a signal, when it goes against you, you're just going to keep thinking it's going to keep going down. And you're just going to give back all of your gains. Ask me how I know. So we're taking gains on 20, which you might think sounds like nothing. But if you're doing this over and over again, you're going to catch 20 a lot. A lot. And you're just leaving the second half on, break even initially, 77. And then as it comes down, what I like to do in addition, the easiest thing to do is just say, I'm not getting out of this until the 8 touches the 34. Another tactic that I like to do is I'll turn off the EMAs and basically call these swing, these are meaningful highs on an 8-minute chart. I'll just lower my stops slowly over time. So like, for example, after this big, huge red candle, I'm going to put my stop at the top of that big, huge red candle. Thinking if it does want to retrace it, if we're going to stay in a downtrend, it's not going to retrace the whole thing. In this case, it was weak sauce. It only retraced half of that candle. So same thing here. Once it has a couple nice, juicy red candles and that retrace can't get above that high, that's where the stop goes. Same thing here. Had another couple of juicy candles. All right, so I'm going to keep moving the stop down to that high. Now this is just ridiculous. There are so many gains to be had here. Like when it's moving fast, the faster it moves, the quicker I move it to the top of the preceding 8-minute candle. When it's really bloody red like this, I do it this way. I just move the stop down to the top of the preceding 8-minute candle. And I would have finally gotten stopped over here doing that. Nothing wrong with that way of doing it when it's moving fast. And you actually, let me leave that there, because if I put the EMA, you're going to find that it's similar, right? I would have gotten stopped there. Had I been using the fib EMAs, actually, I would have gotten more points. I would have gotten a better exit using the 834. But that's not always true. Sometimes this is going to give you a better exit. Sometimes this will give you a better exit. The point is, have a couple different tools in your bag. Pick one, decide which one you're going to use, and then use it. I like to look at both. It depends how frisky I'm feeling and how what's going on in the overall market. Anyway, so that's the deal. I'll show you the other way to do it, which is the KCB, Keltner band channel. Same thing. I got short, let's say. This is the mean on the Keltner band channels. This is ATR 1, ATR 2, ATR 3. This is ATR -1, -2, -3. And the center band is the mean. So price likes to revert to the mean. So if you're short and you put this tool on, you're short 77 and you already took gains at 57. So you already took your gains and you're trying to figure out how to manage the remainder of your trade. This is another way to do it. Put on the KCB, and until you get a candle either closing above the mean or an entire body of an entire candle above the mean, that's your signal to come out. Otherwise, you stay short. So this will help you maximize the gains on the remainder. It's so simple. It's all about your psychology, and is your thinking flexible enough to flip through these tools, and do you have enough discipline to actually get out of the trade when the tool is telling you to get out of the trade? Because the greed is so strong, you're going to always want to ignore the tool or override the tool. But if you want to make gains consistently using these supply-demand zones, that's how you do it. You're only looking for 20 to 80 pips, but it's on the second half that you can get into using these. Because look, anything that you capture more than 20, you're in the bonus. And if you do that 3 or 4 times a day, you're going to grow your account over time. And you're not going to take mad heat because you're always defining your risk by these zones. And also using these fibs too. There you go. Anyway, I hope this helps you. In review, it's the 1 hour, get a candle close below a zone, sell the back test, and then go down to the lower time frame. I like the 8-minute and use either 834 cross. And by the way, I didn't talk about the 200, but you can see I like the 200 on there because the 200 on any time frame just gives you a reference of, are we really in a downtrend for real? And the answer would be yes, we are. I mean, for a day trade scalper, this is a great downtrend, and the 200 is what gives you some confidence that we are clearly in a downtrend. All right, and then the other tool is the KCB, which stands for Keltner Channel Bands, and you want to see price stay below the falling mean or the center line of that, which is the 21 EMA or the mean. Okay, hope this helps you guys. Thanks for watching, and good luck. Bye bye.